Okay, so let me get started. We got a couple questions. I think we got a quiet group today, so maybe we can get a quick session today. And let's open up the chart. Things. Okay. Two. Clean all this stuff off. Okay, yeah. So far, let's see. We got Paula's question. Oops. And Alicia says, I'm actually moving to advance or going through Manny's boot camp on intermediate. How do you go about marking up the 4-hour zones? Do you use wicks? Do you include wicks? It's a good question. Yes, I do, though. It's a short answer. Can you mark up a pair? Got a few weeks off from trading. Need to refresh myself. And that was followed up by, can you show how to use fibs? Okay. Okay, thank you. Let's take, can you show again how to put your buy and sell stops in on the laptop? I sure can. You can do that. Let me open that up in a different window and get that open up, and then I can get it going for you. Brian, what or how do you determine for sure that the trend is over? I will tell you how I do it. Brian, how do you look at SPS if that is? Can you reword that, Anna?
I'll retype it again. Just
how to look
means I want to ask if SPX is now on high, right? Or sometime it is any pair is on all-time high. Then how do you look? Because we know if that is on high, then we can look for sale. But what when it goes up? How should I look that?
Okay, I got you.
Mm-hmm.
Gotcha. No problem. I definitely can answer that. Okay, let me open up this demo account real quick, and that way I can show you guys the just getting that ready real quick. Okay. All right. So, open. I'll come back to you in a second. Okay, so to start, how if the Okay, yes, I think we answered Paula's question. And you can just set you again, like it depending, I don't know if you have an Android or iPhone, but you'll simply just use the same server and username and password, not to log into your broker, but to log the like the username and password that you're using to log into the account from the computer. So it's going to be that same one: server, username, and password.
Okay, thank you.
Alicia wants to know about how to mark your 1 and 4 hour zones. This will also tie into your question, Felecia. How do you find your zones? So I always tell people there's a quick way to do this. This little indicator right here, higher high, higher low, live by Lonesome the Blue, has about 2,400 likes. It's like a cheat code. It's kind of a cheat code, to be totally honest. We're not going to look at SPX for this, so let's look at something random. Let's go with USD CAD. I have not looked at that in a while. Okay. So one thing is, because we're day traders, you can focus on the daily. You can go to the monthly, you can go to the other higher time frames, but I like to kind of stick with the daily, right? So with this indicator again is it's going to help you see main primary levels you need to be concerned with, right? So starting at the daily, you're going to know, you're going to look for your lows. These are our impulse moves from this high to this low. We had one, this high to this low. I'm sorry, this low to this high, right? An easy way to box this in and get your zones together is to start from the daily, right? Mark off where your lowest low is or your highest high, right? So at this point, we already know that this is a key level for selling, right? If it breaks below this, then we know that this is a daily level that is breaking. It's a major level. So we know that this means a lot, right? So we already pretty much have our primary daily zone right here, right? Now, we don't really have a high that's been made, right? Because if we had a high, we would have had an indication here that the high has been made. So because we don't have this, I need to go to the lower time frame to find out, is there a high on that lower time frame? It would be the exact opposite if I was looking for a low. If I don't see a low within the time frame that I'm looking at, I need to go to the previous one below. So I'm at the daily. I'm gonna go to the 4 hour, right? Right now, let me get rid of this. As it stands, this is our lowest low. I'm gonna clean it up a little bit right here. We don't have a high until here. Now, this high that's been made, I like this, right? I'm gonna annotate this, right? It's gonna be a 4 hour high, right? And we can say 4 hours / daily high, right? 4 hour / daily, because we don't have one outside of that, right? And because this is our only lower high that we have, that'll be our primary area that we look to trade to, right? But your goal is to also consider where price is, and you want to trap the price, right? We have a high, we have a low. In between that, we also have this low as well. So we'll annotate this. This is another 4-hour zone right here. We have the indicator to tell us, hey, this is a 4-hour zone. This is a 4-hour zone. There are areas of their zones and rejection areas in between this as well. But for now, this is our primary sell area. This is our primary buy area if it breaks above this area. And anything in between this, we would have to push through that before we got to this level, right? So here, 4-hour zone, right? Now, in between this and this zone, there's nothing on this time frame that we should consider, right? So what we're going to do again, drop down to the next time frame. Drop down to the next time frame, right? Now, there is on this time frame, we have price in between two zones, here and here. We have a level of rejection right here. We don't have a low that's been created or a high that's been created right here on this time frame. So guess what I'm going to do? I'm going to drop down again. Let's go to the 30 minute. Still, right? Still don't have that, right? But you can see here, there was once a low right here. That's what these little dots represent. This low tried to settle here, right? Guess what? Let me use that. That's my 30 minute. I don't even have a template for that. It's my 30 minute. So right now, I have price trapped between a 30 minute and a daily zone. And if price break above any one of these, that's why I'm going to be looking to trade to, right? I'm going to drop down to the 15 minute and do the same thing. Guess what I have right here? That's my high, right? That could be my TP already established right there. So that's 1, 2, 3 areas, right? That we already accounted for. I can have a target here, or I can settle it here. I'm going to do in between, right? I'm going to also say, all right, this area right here, rejection, 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 place it right here. There's another target. Overall, on this trade, I'm looking at about 20, 30 pips, 20 pips on this trade. Now, because we have a daily zone, we have to go to the higher time frame, back to the daily, to find our areas of rejection, right? So if it breaks below here, where would I trade to, right? The first rejection area that we have is down here. Over here. But as you can see, it's only 4 pips though, right? So I'm going to probably expand that and say, let's look at a broader look, right? If I'm looking to trade this, I would probably be looking to at least trade down to here. That's a rejection area, right? So I'm going to use that as a target. If I measure that out, this would be good 50 pips. That works out for me. So I'm going to use this for my sell break. This for my buy break. And anything in between that, we're going to get our targets from the daily. Here's a 1, 2, trading it down to here. 3, 4. That puts us all the way down here to the final area, final rejection. We can even add more targets on here if we're looking at the rejection levels. This could be one, but if we start over here, it's 1, 2. And because for me, I would want to see it come back to the weekly. That would be my next. And until we get to this zone, this is all I'm going to do. Come up to this daily. This is a daily rejection. So we trade into the 4-hour daily zone. For the buy, we'd be looking to trade to the daily rejection zone to the sell. Does that make sense?
Yes, for me.
Does that make sense, Felecia? And who else asked that? Felecia and Alicia. Does that make sense, Felecia? And Alicia? I don't know if she's still on. Yeah. Okay. I hope that makes sense. But if you use this strategy to mark up your charts, if you're doing break and retest, it's an easy way to help you get some clarity on this. Let's try this. Let's try this with a different pair just so we can see it again. We use USD CAD. Let's use somebody throw a pair out there. Anybody throw a pair out there.
GJ.
GJ. Okay. So all right. Clearly got a high on the daily. Right?
Mm-hmm.
Clearly have a high. We don't have a low on the daily, right? We don't even need to go any further on there, right? So let's drop to the 4-hour. We don't have an indicator showing a low, but we can clearly see like this is a low right here. We see a previous highs right here. We see structure right here. And you know, if you can see it from the higher time frame, you don't need to go down to the lower time frames like I did, because you can already see, all right, there's structure right here. There's structure or rejection right here. There's structure or rejection right here. There's structure or rejection in this area, all the way down to this area to here. My whole chart marked up from the daily from the 4-hour, because you can see where the rejection is. Because let's see, where have we been on this chart? Have we been this high? Right? So we're gonna look left. Yes, we have, right? Okay. Same approach, right? Where do you see any rejection in this area? This is the last time price has been in this area, right? Main thing I'm seeing is this right here. Now below this, not seeing a lot within this area. Nothing over here, no rejection, nothing, just free flowing price movement. Nothing in this area, right? Nothing in this area. I don't see anything until I get to this wick. First time I see any rejection, right? If I keep going, I see some rejection, right? here. So I don't see any real rejection in between these areas. So, and this is going all the way back to 2016, all the way back to 2016. So for me, for us to be in this area, and if we decided we want to buy, let's go down to the lower time frame and scoot back over to where our price is currently. You already have your buy and sell set up already. Let's measure this. So range of 35 pips. You can look for your trade to go at least 20 to 30 pips, which is about right here already. And you could likely split this in half. That's your buy.
So you took your buy off that daily. I mean off the high on that
Yep. If it breaks above this, you're going to be trading at least 20 to 30 pips above this price zone. If it trades above anything above that, this will be your goal to get to right here. For the sell, you'd be looking to sell from here. You're going to be looking for at least 20 to 30 pips on this trade. This is the first real rejection right here because it's a previous high. So I would look to trade down to here. You can split this up as well. Let's go to the lower time frames and see if we can split this up any further. If it sells from here, we can split it like this little rejection area right here. This area right here. And that looks actually pretty good if we leave that like that. 20 to 30 pips on this would be roughly around here. So this would be the main target you would be looking for it to come back to if it broke down here. We got price evenly distributed between these highs and lows. If you wanted to get into an early buy, you could probably trade above this high off the 1 hour. This would be an early buy. But your primary buy would be above this high. This is a new, this is a yearly all-time high. This year's all-time high. It's not an all-time high, but it's a 2021 high right here.
Oh boy, that's great.
Huh?
I mean, I got that. I got that.
You understand everything, Miss Tate?
Yes, I'm understanding that. Goodness.
Could you do this if I asked you?
Tomorrow.
Tomorrow? You said tomorrow.
I think I can.
Okay. What about you, Felecia? You comfortable with it? That made sense? And okay. All right. And mention about fibs. Fibs. Clear this off. And I think that is on. Hang on. Oh no. I think I did something. Oh. No, I did not. Okay, since I do this a lot, I think I got it drawn up already. Yep. your fib zones and understanding fibs. Screenshot this if you can. Take notes on this if you can. But your default settings on your fibs, right? They measure impulses, right? And impulses start from based on the direction from a low to a high or from a high to a low. And what you're actually measuring is the supply and demand of the market, right? When you buy, you're buying from demand zones. When you sell, you're selling from supply, right? And in between that, there's going to be levels of indecision. I call it the kill zone. I don't know, there are different golden area, golden zone. There's going to be areas that you consider to be key decision points, right? And it's proven time and time again that these areas are those of decision point, where if you're in an uptrend, you see demand shift from the low into the indecision area and take control of the market to push it higher. If you're in a bearish market, you see supply shift from the high into the indecision area to take over the market to continue it down. Essentially, that's what fibs are measuring and what they imply, what they indicate, right? Before we look at the numbers, everything that I just explained to you, it looks like this, right? Looks like this. You have some area of consolidation or accumulation. And at some point, price impulses out of this range. And it finds the area of supply somewhere. It may consolidate or simply reject in that area until price returns back to that indecision area that's built from the buyers that were down here and saw they could shift price up to another area of rejection. Once they are able to build up enough orders and enough price action to continue the price, they're going to buy the supply that was here to create a new high until they find more willing participants to sell. From a sell market, you have supply here. You have previous demand here. You have an area of indecision in this area. Supply shift from this area of supply into the indecision area of the impulse and took control of the market because no one was willing to buy at this price. Because they were no longer able to buy at this price, they were able to shift supply even lower to take the price lower and continue to a bullish market, bearish market, right? When you have these impulses, you can measure and offer projections. Anna, you asked, how do we know where to expect price to go in all-time high range? It's because we can measure the impulse that brought us to that point.
Yeah, I'm doing the same thing. Yeah, I'm doing this.
Yeah, you're going to use the fibs to project where it will go, right? So if we had an impulse from prices over here at 159, 60, 70 area, and we had an impulse to 161 with a full retracement down to these levels, we can expect a symmetrical move at least to these 168, 150, 138 area, right? If we get this move, we essentially made the same move from here to here. Same move at minimum that we did from there to there that we did over here. So that's 150. This is around 157. In most cases, we can expect the equivalent move. You want to focus on 618, 50%, and 382. Those are your indecision areas. Your supply area is 886 to 100. Your demand area is 0 to 12.5. When you're in a bearish market, it works the same, but you can just flip it. Your supply is between 0 and 12 and a half. Kill zone 382 to 618. Demand 886 to 100. It all depends on which direction you draw it in. So this is personal preference, how you draw the fibs. You just need to know where your kill zone is, right? And reference to where the market was. Because I could draw the fibs in either direction. I still need to understand where the impulse starts and ends. And then I need to know that even if I drew this in the opposite direction, that I need to be looking at this particular area, right? In a live market, looks like this, right? Think about the bullish example that I gave you, right? Where I want you to see one thing, the bullish example over here. I'm going to copy this, right? This right here. And remember what you see right here. You have 0, A, B, C, right? Let's find that same thing on a live chart.
Like SPX on 4 hour, this is exactly same chart.
Yep.
Mm-hmm.
All righty. This is going to be over a daily move right here. So it's not going to, you might not see it because it's not clean to your eyes, but fib levels from here to here or from here to here, right? Supply is up here. We sold from here. Demand's down here. We bought from here. And this indecision area starts from around here down to about here, right? And if we take that same example that I gave you, right? Here's the low. There's the high. This is the low that moved it from here. That's my 0. That's my A. That's my B. And my C is somewhere up there in the sky, right? So if I take this, I already have this measured out. I don't know. You're gonna have to overlook some stuff, right? Because I got this all drawn up. This 0 to A, if we measure that, let's see. Let's use a box. 0 to A is here. I'm just gonna stack this on top of this, copy it, stack it on top, right? Before I show you this, I want you to answer this question. Do you think that we repeated this move right here on top of this? Yes or no? And that's please drop an answer in the chat.
What is your question?
Nobody answering.
I did yes.
I'm on this session by myself. I'm on here by myself.
No.
Somebody said no.
Yes.
Who said no?
Paula.
Paula said no. All right. I'm glad you said that so we can show each other up. So this exact same move, 0 to A, retrace down to B, into supply. Into demand. From B to A, B to C, we should be getting the exact same move that 0 to A made. This is that same move right here. If I expand this, did we not get that same move over here? Correct?
Yes.
Exact same move.
Mm-hmm.
0 to A. We got 100. We actually got more pips than that, right? But we got at least at minimum the same amount of pips that we got. So we would have got the equivalent of this move right here, about here. We easily got that and pushed through it. We made an entire symmetrical move once we went to the negative 100 right here. So we almost got it on point, but it's in the case like this, you are like what, 10 pips away from 40 pips away from getting this. You pretty much made the move, right? So that's what you want to consider when you're looking at fibs. Did that answer your question? I hope so.
Hey, Corey.
Yeah.
How come B like is so spread like so far apart? If that
Because we're looking at a daily move right now.
okay.
Yep. And just because it gets like this would have been the B, right? Just because it comes down here doesn't mean it's gonna immediately move from that area. It might want to play around in here. Like, let's go back over here. Right. So this would be the example of the area we came from, right? So we left from here to here, right? This would be our 0, this would be our A, this would be our B, right? It may not, once it gets to B, it may not want to just move immediately to the upside from there. It might want to stay around and fake you out a couple times, you know, make you think it's going to sell from here a couple times, you know, drop a couple times before it's ready to go and expand, right? That is the process known as accumulating orders, right? That process is what the banks use to build up enough orders and enough liquidity to drive the market price higher, right? Some signs of that are anytime you're in consolidation, you're in an area of accumulation, or you're in an area of distribution. Distribution is the exact same thing. It's just what you would call it if we were selling. This is an area of accumulation. This is an area of distribution. Price is distributed here to an area of demand that accumulates price to expand to a new area of distribution right here. It pushed through this area that was once distribution here, bought everything up that was trying to sell here, and expanded to find a new area of distribution. So essentially, this is what the market does over and over again. And once you guys like kind of learn that, you can kind of throw in some fib knowledge, and you can get your projections, and you can understand like impulse, retracement, impulse, retracement, impulse. Is done going up. Okay, fine, cool. Distribution, impulse, accumulation, distribution, impulse, accumulation, distribution, impulse. It's done selling. Okay, cool. We're in an area of accumulation. Okay, cool. I mean, it's going to buy again. That's what happens over and 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 over again. Ever since the market has existed, this is what happens all the time.
So this was a total wick-off theory?
Really, wick-off theory and smart money theory, to me, give you the purest form of the market, in my opinion. Wick-off and smart money, they both go hand in hand. It's concepts in those two that blend, And then once you understand how it works and where and how to combine those, you pretty much own the market.
Mhm.
You own it.
Got it.
It's yours to pull out money whenever you want to.
Mhm. You are going to do that session, right? As today I saw you would on a smart money tab
Mm-hmm.
at something.
Mm-hmm. Miss Tate wants to know how to put in buys and sells.
I think you did it. I think you answered it. They're
No,
doing that. Hmm?
no, I'm gonna switch to my computer, to my broker, demo broker, so I can show you. So the question from Miss Tate was how to put in buy and sales on a laptop. I got my broker open right here, and this is a demo account, so we can put in as many buys and sales and all that kind of good stuff, right? We'll go to Bitcoin because it's the only thing moving right now. And this will also answer Renetta's question about trailing stops too, right? So I'm gonna open this up. I'm gonna put in probably a bigger lot size than I would typically. But essentially, there are a couple ways you can put in the trade. You can turn on the one click. You need to have auto trading on in order to do that. The first time you do that, you're gonna get a message that looks like this. Trade, and turn it off. Okay. Let's get rid of that. Okay, so the first time you turn it on, you're gonna get this. Oh man, I guess it didn't give it to me because I already had it on. You're gonna get a message of just agreement, just saying that you're aware that if you click this button, you're actually getting in a trade. That's basically what the message says, right? And you can set your lot sizes here. Set your lot sizes here. 3. And you can also enter the trade by right clicking in the window using the buy limit right here, because you have to be aware of price. If I move my mouse underneath where price currently is, this is going to always default to a buy limit. If I'm above price, it's going to always default here to a sell limit. If you want to change that, you can go to trading, put your limit orders in right here, or your buy stop order in, or you can enter a new order here, right? You can put in your pending, your market, your whatever, or your limit orders, whatever you want to put in from this window when you go to new, right? Set your lot size, stop loss, take profit, add a comment in here. And then you can go market or pending, and then you can select what kind of order you want to put in right here, along with the price that you want to put in. Usually, we're market executing, right? So if that's the case, you can just come over here and just say buy. Let me get out of here. Just buy or whatever, buy market, right? Oops. So I'm buying market right here, right? Now, when you're looking at stop losses and trailing stops, so we know how to put our trade in. That question was answered, right? If you market execution from your laptop, you have the ability to adjust your stop loss and trailing stops and take profits a lot easier than you would from the phone, right? If I'm on the phone and I want to give a stop loss, and let's say I want to put this stop loss right underneath this wick, I got to know what this number is right here. This number is 6545.41, right? I have to know that. And then I have to input all of that into my phone, to get that information, right? But if you're on your laptop and I want that trailing stop to be, or my stop loss to be right there, this is what I'm doing. Oops, it's done. It's done right here. Let me turn auto trading on. That's why we're doing that. And I want my take profit above this high. I don't know the number, but if I was putting it in my phone and you find out, oh, that's 6686.60.5, right? Is where my take profit gonna be. But if you're on your computer, I know I want my stop loss above the high. I'm gonna take profit above the high. Just gonna grab it, drag it. Boom, I'm done. Modified, done. Okay, that's it. That's why it's a lot easier to take on trading from your laptop and not from your phone. It's horrible trading from your phone. I hate it. I don't think you should do it because you can mess up a lot. But anyway, that's another story. If you want to know how to use trailing stops, the first thing you need to understand is how one, you can only do it from your computer or from your laptop. You can only do it from there. You cannot do it from the web interface. You cannot do it from the phone, only from the laptop or desktop application. And when you're looking at setting your trailing stop, you need to understand where and how far or what the pip count is for the broker. If you don't know, let's say you want to move your stop to break even as soon as it hits this week or this week, right? So what you're going to do is you can take this crosshair tool right here, click it and hold it, and let's drag it down to what the entry is, right? This is about this is 19041. You're looking at the middle number, right? So if I pull this over here, there's three numbers that you're seeing: 13/231509/63713. The first number is the number of bars that you went over left to right. The second number is the pip count, and the third number is the price. So I know that if I want to go to this area, which is, let's say, whatever this is, I want to move my stop loss at break even, I need to know that number in the middle, right? So that's 2004, right? We're going to right click on this, trailing stop. Ignore all of these numbers right here. Ignore all of these, and you're going to go to custom. You're going to put that number that we just had, 2004. And now I have a trailing stop. You can confirm this by clicking on the terminal icon here. This is highlighted yellow, and it'll stay yellow until you move into profit. Once you move into profit, this trailing, the original stop loss is going to move to break even once you get to your 2004 pips in profit. And once you move to that amount in profit, the price is going to move to break even. And once it's at break even, every pip after that is going to go up in profit. And it's going to continue to follow it as long as the price is going up. The price is stopped and stalled, it's not going to go anywhere else. So using SPX as an example, if I went up, if I had a 50 pip trailing stop and my stop loss was originally 50 pips, right? And I went 100, let's say I go 50 pips into profit. At 50 pips in the profit, my stop loss is going to move from 50 pips and a 50 pip stop loss is going to move to break even. After I go to break even, once I move 51 pips in the profit, my stop loss is going to move 1 pip in the profit. And for every pip after 50, I'm going to go up that amount, a number of pips. So if I go 100 pips in the profit and my trailing stop is still active, I will eventually be 50 pips into profit at one point because my trailing stop is 50 pips, right? So at 100 pips, my trailing stop will be at 50. At 150, my trailing stop will be at 100. You see where we're going with that, right? It's going to move up every 50 pips. If I go 100 pips in the profit and my stop loss is at 50, let's say I get a pullback or a retracement, right? And instead of being 100 pips in profit, I'm at 70 pips in profit. Do I get taken out of the trade? Yes or no?
Yes.
What's that?
What did you ask?
If I have a 50 pip trailing stop,
Mhm.
and I go 100 pips in the profit, after I get 100 pips in the profit, my stop loss should be at 50, right? Correct?
Yeah.
After I go 100 pips in the profit, there's a pullback and I'm only up 70 pips in profit. Do I get taken out of the trade?
Yeah.
You do?
Yeah.
No, because you
Oh.
got a 50 pip trailing stop, so you still up 70.
Yes, sir.
Got it. Cool. That's correct. So once we go 20.04 pips in profit on this Bitcoin trade, this trailing stop is going to move to break even. And it's going to keep following me until I get to the take profit up here. And you will keep moving as long as you are in profit. Now, once you're in the trade, right? Let's say you want to give it some room, right? The trade is going how you want it to go. You know, you already at break even, but you know, you got up 70 pips and you start to retrace a little bit, but you still think it's going to go back. You can just grab the stop loss, move it to wherever you want to move it to, and just adjust it. You can just adjust it and continue to adjust it until you feel like you reach profit targets that you're interested in going to.
Hey, Corey.
Another note. Yeah.
I understand that you're saying that we can't do this from our cell phones, but for the most part, I only trade on my cell phone. So is there something similar that I could do?
No. You have to do this from your computer. You have to. They only offer it from the computer. And the next thing you'll need to know is if you take a partial, you'll need to reset your stop loss, your trailing stop, because it's not gonna, once I partial, you'll notice like, all right, cool. I'm gonna come over here, I'm gonna partial right here. Okay, take a partial on this. All right. Yeah, there we go. I want to take half of this off, right? Before it stop me out. Stop me out before I could do it. But if I had to close this half of that order, I would have had to re-add the trailing stop. So that was the last piece on that. Does that answer your question, Miss Tate and Renetta? I hope so.
Hey,
Yeah.
record. One thing I missed. What I noticed it seems like when you enter the trade, it seemed like a profit and your stop automatically came up.
That's the spread. Yeah, that's all. That's just the spread.
Right, but when I enter mine, I have to place my stops and my profit targets. And so that's,
Yeah,
or are you doing it quicker and I'm just not recognizing what you're doing?
I'm doing it quicker.
Oh, okay. So, all right, I got you. So I'm good there.
Yeah.
And then you can, modify with the trail and
Yeah,
stop.
I place the trade first and then I modify it once I'm in it so that I can just get in there real quick and do what I gotta do.
One question I always wanted to ask, but I forget to. With this MetaTrader 4, can you set up? I can't think of the name what we used to call it, but with NinjaTrader we could set up. Let me think of a word to replace it. A template. Whereas, wherever I entered, I already had a preset amount of stop order and a preset profit target. I haven't been able to seem to figure out how to do that with this MetaTrader 4. Is it possible?
Templates. I don't know. I don't know.
I even because with NinjaTrader I could even set up, trail and stop templates. So I would just go to, depending on whether I want a trail or stop or I wanted a 30 tick profit and 10 tick stop. I could just go to my strategy that I had already configured and just click that. And so when it hit
I
my,
don't think so.
okay.
That would be cool, but I don't think so.
Okay.
It'd be nice. It would be nice.
So Corey,
Yes, ma'am.
so when I get ready to trade on my laptop, I go up to the indicator that you had at the top of the screen. And that's what's going to show me, you see the line where you have the Bitcoin, that's going to show me that. And that's where I put in my trade.
No. You what do you mean when you say the line that shows me Bitcoin? This?
The trade at the bottom.
Oh, down here?
I and Bitcoin USD. Yeah, that. Well, that yellow.
This is a terminal right here. You have to click this little icon right here.
Wait a minute.
This is just going to show you the trades that you're already in. You don't have you enter the trades by selecting the buy or the sell from here, setting the lot size, and then or coming over here and new order or using one of the buy limits, buy sell stop or buy limit.
Oh, okay. And then after you do that, then that's when you get that at the bottom.
No, I mean this is always going to be here if you click this. And then once you click this, once you enter a trade, you'll be able to see what you're in already, and you can adjust the trade and stuff like that from here. You can close it out over here if you want to, as well. And this is just going to show you everything that you're in, right, at any given time.
Okay.
Got it.
Think so.
And then, okay, Brian's question is, are you still on, Brian? Let's see. Yeah, still on. Brian asked about how do you determine for sure if the trend is over? So for me, when I'm looking at trends, right, or when I'm looking at price areas, right, let's go back to Trading View. When I want to see whether it's over or not, one thing you can look at is where are you on the higher time frame fib levels. So I'm going to use SPX for this example because I know it like the back of my hand pretty much, right?
Yes, sir, that one woman.
Yep. So if I take my fibs, right, and this is the low of the move, right? This was the last impulse that we traded out of right here, right? From here to here. Let me switch the fibs to, let's go to default, right? If I know, and this is a great example again of exactly what we mentioned earlier. Here's the impulse, that's here to here, and then price came down to here, and then we expanded, right? We need to see if price is going to come at least back to these areas. And did we do that? Right? We did. So this is a perfect example of what I mentioned earlier about the fibs, right? We got our move. We got our 0 to A move from our B to C move already, right? Now, I am going to note that these levels on the, I'm going to note the levels of price action on this, right? Because it's got to go to one, it's got to go to 127, 138, 150, 168. My goal is to make it to a symmetrical move, right? So without even considering it, based off of this swing right here, this initial impulse, I can already see we have a projected price movement to 45.90 already. 45.90. My trades are going to be considering these areas anytime I'm looking at this, right? Now, we also have another impulse, right? From our 32 that we can consider, right? So let's see what's going on over here. We're gonna just copy this, right? We don't necessarily have the 100 yet because this is still in action, right? But we will use the highest as being, right? At 45, 42. If we were to get a pullback right here, you would need to consider this low, this high. Now you can price out your projections, right? You can say, okay, we had A to B here. We had 0 to A here, A to B here, B to C here. Now we're just going to repeat that, right? Where is A to B? 0 to A is from here to here. Potentially, A to B can go as low as 44.09. And B to C can potentially go as high as 47.55. That's what we would be looking at right here. Right? And if you look at what we just did, we just drew up impulse. We had a low, consolidation, impulse, supply, order blocks, rejection areas right here, back to consolidation, respected this level, rejected this level, impulse, right? Will we find any type of supply here? We have potential area right here. We have some order blocks. We have some structure right here. It could sell off right here near the high, but there's some other factors that need to be considered to determine whether or not we would sell off right here. I don't want to go into those today, but you know, some of you guys already know, right? There's liquidity over here, right? If we do find that liquidity, are they going to trade through it and continue, or will they respect it and retrace? And if they retrace, you can see already 618, 382. I have some different fibs I would use to get like a sniper entry, but these are your main areas, 618 to 382. So if we get an A to B move, we could, at this point in time, 45, 42 is our high. Our potential B can go as low as 44.09 if we get a retracement. if we get a deep retracement. If we get a shallow retracement, we want to see price come to 44.60, right around here. Shallow, even shallower, we would be looking at the weekly price right here, right around the weekly price at 44.77, shallow retracement. And then we go from there. That gives us our projection as to where price can go. And then you're going to use these intermediate levels as price reaches these levels as targets. Got it?
I have a question.
So Gauri, I have a question.
Hold on. Brian, that was your question. You got it?
Yeah, I do have a question though. So if you go to the left a little bit, yeah, just go to the left a little bit. Like, yeah, scoot it over. We could say this within an uptrend, right? So should I have considered the trend broken? You see how you got that C up there to the left around the middle? Yeah, right there. Should I have considered that trend broken when it came underneath B and continued down? Or since
Right
because
here.
we're on a right, but to the right, you see that dip to the right, should I have considered the trend broken after that trend dropped below the B?
Not necessarily broken, but you have bearish momentum throughout this move right here, right?
Mm-hmm.
So on a lower time frame, you would be considering trend done, lower time frame, right? But you also have projections that you can use from here too. We draw the fibs out. That's our swing low. Look at where it's telling us it's going to stop.
Mm-hmm.
And look at where we stopped over here.
Okay.
It's telling us if we see this move down, right? We retrace, gave it a spot on retracement. So in the opposite direction, we did just like this. We said 0 to A to B,
Yep.
B to C, right here.
Mm-hmm.
And then once we got this, guess what we do now? Repeat, rinse and repeat. I'm gonna take this same move. Oh, oops. We'll take this same move, right? Copy it. Copy it. Take the same move. Right?
Mm-hmm.
With this impulse swing right here. Redraw it. A, 0 to A to B, but guess what happened? We consolidated. We couldn't break below that. Then once we tried to get a B to C, right? B to C only went here. We didn't get a symmetrical move off of this. Because we didn't get a symmetrical move completely back down because, you want to know why? Because we pushed through the kill zone and reached into supply, right? We pushed straight through the kill zone. When you see a price pushing through the kill zone, that gives you the signal that we're about to have a shift. We essentially went, and here is where this is some like high level stuff, but here is where Wyckoff comes into play in these kind of situations. I could show you how you could see where we would consolidate ahead of time, right? Using this move from here to here, right? So you had this move here to here, right? And you were like, why didn't you use it right here? I could have, right? But guess what? This lines up with the level. So I can use either one of these, right? When you are in like a larger time frame move, you can come down to the lower time frames and determine where your levels of consolidation will be, right? Because in a swing, right, you'll see price go from 0 to 100. You'll see a pause around here. You'll see a low around here, a fake out, and another low. That's where the Wyckoff situation comes into play. When you were in the fibs levels, let me show you this. Your consolidation areas, you have in a buy area, you'll have a high, you'll have a attempted retracement, you might have this swing, then you have a low. Once you see you got this low right here, you need to focus on this low and this high. Anything in between that, that's just consolidation. And in between this, you're going to see stuff like this until you do this. Every single time, right? This is like not perfect or not exact, but you have to understand, like, this high and this low are usually going to be the low that sets your range of consolidation. If you are stuck in this from any time frame, these are the areas you need to focus on. If I buy from down here, my goal should initially be to get back to here. If it comes back up in this range near the high and it doesn't push through this, I know that inside of that range, I'm setting short-term lows and I can sell it back down to here. And that this happens over and over and over again.
So based upon what we're seeing right now, if it breaks the 100 right now, it's kind of back up. See where we're going? We're around the 450, 45, 50. If it breaks that, then we can say our uptrend is continued. But if for whatever reason, if it goes down and breaks below the 42.73, then we would consider now we're officially in a downtrend based upon the data.
Term.
Now,
short term. Because SPX ain't never in a downtrend, right? That's another thing, right? So if this is our high, right, you can already see, right? If we get a retracement that does not continue, our short-term low temporary should be around a weekly. If it wants to continue down lower, we already know we got 618, 50%, 382. That's going to give us this intermediate low. And once we got that, right, we need to be looking out for this type of pattern to do this, right? And give us the move. If you look at what happened here, I'm just going to copy this right here and just expand it. We pretty much got the same thing right here. Short-term low that didn't break. Let me just delete it and draw it. Low, high, short-term low, short-term high, intermediate low. At this point, all you need to focus on is this low and this high, right? We had a high that didn't break this. You had your low, another couple swings, and then you broke it. You breaking out. And now you're trying to take this high out right here. For now, we just right here, but I don't see why it's not coming down at this point. So the same thing you just saw, right? It's the same thing that's happened right here, over here. It's just, we just looking for it to continue at this point. We got deeper than expected move down over here and over here and over here. I'm sorry, over here and over here. But overall, we held it and held within the range, right? If we throw our fibs on that, the same move we just looked at. You can see we held high, had the short-term low, right? Push down, push through it, right? And remember what I told you, right? In this case, it didn't pan out, but we broke below the kill zone, so we should have been looking for it to continue, but we held around 236. I have another fib that I use for entries, and you can see that this, if it's still bullish, would have gave you optimal trade entry for a buy. If it's still bullish over here in this area, there goes my 786, there goes my 70, and if I wanted to, could buy at 60. So that's just some extra like stuff. I don't, want to go over that today, but I hope you got it.
Sorry.
Got it. Yep.
Yeah, I have a question about this one where we are right now on SPX.
Okay.
If you were to take like a counter trend, like a sell, what will be your confirmation? Because I marked an OB for this one, and which is rejecting it right now. And what will be other confirmation to take the sell?
To take the sell.
Yeah.
Because we so bullish. Because we so bullish right now, I would not suggest selling until, we looking at daily candles, but even on the 4 hour, right? Where have you seen like strong bearish candles within this move? Like even right here, you would have got a decent little move down, but overall, it's just been all bulls. So when I'm looking for a sell opportunity, I want to see a situation where I got this right here.
So even you don't take the retracement? That's what
Yeah, sometimes I will, but I need to see something that looks like this first.
Okay.
We don't see this at all, right? This situation gave us something similar to that, right? In this case, we had this, right? Over here. Right? So over here, we had up move, in the up move, push down, impulse up, drop, return the price, drop, done, right? That's what we had over here. We had a high, we had a retracement, we failed to get a higher high. You could have sold here. If you didn't sell on this drop, you had a return to this order block that's over in this area right here. One return here and one return here. And those two were sales, right? But you see the third time, it blew straight through it. It blew straight through it. Right? You want to see, in other cases, you want to see a high get taken out. That's what a fake out will look like. You see the drop. You might get a smaller move inside of this right here that gives you the swing to get the initial impulse. But if you don't understand, you can trade back into this area right here to take the drop from there. But those are the kind of things I would look for. Even right here, look at this over here, right? Impulse up, there's your high, fake drop. We took the high out over here, took this high out, then we dropped again. We had a return, and then we had a huge drop right here. You can call it inverted head and shoulders or whatever you want to call it, but it's the importance of what the pattern is more so what price is doing, right? Then, oops, the cell over here, right? You had short-term consolidation, 1, 2. You had a high, temporary high. You had the price take out the high, right? I mean, take out. You had a high, you had a low, you had another high, take this high out, right? But we couldn't go any higher. And then after we took this high out, we traded below this low. This area right here becomes an order block right here. Now I know if price comes back to that like it did, cool, I can take the sell from here and you would have got it down to here. Capiche? Hope you understand that. Do you need a trade manager for that? John, I think you're talking about the, I'm not sure what you're talking about, John. John just.
Yeah, he was talking to me, reference, setting up
okay.
that auto strat.
Oh, okay. Does anyone know how to add the pip counter? The pip counter is added like this. You are going to need to install it. I already dropped it inside of the, you need to just copy it. I dropped it inside of the, it's inside of the, oops, where is it? Hold on. I dropped the trade copier inside of the resources in the old Discord, but I'll put it in a new one. So you can just download this. And when you download it, you're gonna go to your broker. You can go back to your MT4 and you're gonna go into File, open Data folder. You open the Data folder, you're gonna be looking for this MQL4 folder. Double click that. Then you're gonna look for this indicator folder, double click that. You're gonna take the indicator that we had to something. You're just gonna take that and copy it into this indicator folder. And then after you copy it in the folder, you're just gonna close out your MetaTrader and reopen it. And once you reopen it, you'll just come over here to the indicators. And you should see it right here, kangaroo guide, pip counter. Double click it and click OK. And it'll be over here in the window. And so it'll tell you the number of pips you're in profit or you're down while you're in the trade. Since I'm in no trade, it's just gonna show 0. So you go away, don't have one. Sure. Pip counter, cool. Then I have to check that out. Soft for back testing, but it's so kind of like. Do you have a back testing software that's lightweight? Ray, I just use TradingView, the replay tool on TradingView. Right here. And when I do it, I just look for what I'm looking for. And all right, if I'm looking to buy, if I'm looking to see how I would buy, I'm just throwing my levels on here and I'm hitting play and I'm watching it. All right, bought here. That would have been a good trade. If I'm looking to buy here, it would have been XO amount of pips in profit. Stop loss might have whatever been here. I would have at least been looking to get here initially. I got that. That's a winning trade. That's how I backed it. Or whatever I'm looking for. You know, if I'm looking for breaking retest, right? I'm just gonna randomly pick a pair, mark it up, and then go ahead and do the same thing. No, no, you can only use the pip counter on the desktop. Only on desktop. I'm telling y'all, man, y'all gotta get off that phone, man. Like, it ain't safe. It ain't safe for the black or the white girl. It ain't safe for nobody. It ain't safe. It ain't safe. It ain't safe. It ain't safe.
No, no judgment, but I remember years ago when mobile phones was coming into the picture in terms of people trading on it, you know. But I am really amazed at how many people actually are trading on that phone.
It amazes me too. Like, I will manage my trade if I'm in it and I'm already good in profit and I'm about to be leaving the house or something like that. But making that primary, nah, man. All these people that be bragging about you know, trading from their phone, like, okay, you keep going like that, it's gonna bite you at some point. It's gonna bite you. I put in trades and fell asleep. I put in trades by mistake with my phone in my hand. I went open up my chart just to look at some stuff, didn't realize it, put a trade in, blew my account. I've been in the trade that I got in, and I was out and I lost signal. I couldn't do nothing about it. $8,000 down, like, for no reason. I could have waited. I didn't even have to get in that trade. I'm in the middle of Mexico, and I'm having fun. I'm enjoying life. I'm like, oh, I see a good setup. I'm about to get in this trade. I even used probably a middle-sized lot size that I shouldn't have used, getting into it like that. And I lost it, and I blew my account. And I didn't blow it all the way up, but I took, and that was like a 70% loss I took on that account. All because I couldn't wait to take that trade, you know what I'm saying? So that was, you know, you ain't doing that on the computer. So, you know, I wish you could lock the app on my phone so I wouldn't even be able to get into it unless I put a PIN code in or something like that. You know? How often do you mark up a chart? Daily, every single day that I trade and when I study. I enter sometimes, look at my entry number, I'm like, okay, yep, that's what happens, Stella. Because you could fat finger the entry, like all kind of stuff, man. Like, you can't do trailing stops. You can't, you can take partials. But nah, man, I don't like that. And I always preach to y'all, like, get off the phone and trade from the computer. Trade from a desk, you know, where you are, you know, by yourself, able to concentrate and all that kind of stuff, because you need to focus. Like, you can't be out having fun and like just running around and, you know, doing that kind of stuff like that. These people be bragging about being out on the beach and with their laptop and stuff. If you scalping, go right ahead, you know, because you only planning on being in the market for real. But like, I like the move, right? So I'm not gonna be, you know, on the beach with my laptop. Like that's my free time. So on that note, I think I answered everybody's question. I think I answered everybody's.
I have one, but it was more just of a
I see it.
replay.
Can I go over the entries today in reference to the 3 to 12 to 3? Gotcha.
And let me put a question with that. Based on what you just did with the fibs and the waves of the daily movement. So when you looking at your setups and you're marking up your charts, because I know you intraday trade and then you swing trade as well, correct?
Mm-hmm.
Okay, so clearly those huge wave moves on the daily, you know, we don't sit around and wait till they hit those, you know, lower points to take your interest. So, with your mindset always being buy because of XPX, but you do take sales. So, is your mindset while you're waiting for the market to maybe hit your B or C levels, your B level, let's just say you're going up, you got a 0 to A, pullback is going to be down at B and you may be looking to take a trade long. In between all of that, intraday, you are looking for order block to order block opportunities, correct?
That's correct.
Okay, and then when it hits your larger time frame retracement level that you're looking to buy, maybe to be the 4 hour or the daily, that's when you're looking to maybe put in help me out with the word I'm looking for. Your swing trade.
Yep.
Okay.
Once I get to those levels, that's when I'm like light bulb moment. All right, it's game time. If we at a higher time frame level, I'm like, okay, this is going to either this should reject, and even if it doesn't reject from this level, I can still get in this trade to reverse it. If I take the trade and it's not ready, usually 50 to 100 pips in profit, is going to push back down and continue to go, or push up and continue to go up. So if I know I'm at a key level on a higher time frame, it's just my job to say, I'm dropping to the lower time frame to find the entry, right? And while I'm at the lower time frame, I'm looking at these levels to say, all right, cool. Is it ready? No, because I tried to put in a trade in the direction that it should shift to, and it went about 100, 200 pips in profit, and it came back to entry. That means it's not ready to go. But while it's doing that, I'm taking partials, I'm closing out trades if I see it turning. And then if I see the opportunity to take the continuation in the original direction, I'm saying, okay, I reached a short-term area. Here's order block, liquidity, breaker, fair value, gap, all that kind of stuff. I can take the continuation trade in the original direction, or whatever, vice versa, in the opposite direction. Just like when I mentioned over here, we were talking about this area right here, right? We got to this point. If we were thinking we were going to buy, we could have bought, but it came back. Could have bought, it came back. Could have bought, it came back. Could you have made money in this? Yes, you could have, right? But overall, we still were going down, right? And I could have bought here to take the sale to continue. Bought here to take the sale, bought here to take the sale where I thought it might sell off, which would have been this down series of candles right here. That's the order block right here. So all the time when I'm trading, I'm always looking to see where liquidity, where order blocks, where fair value gaps. That's all I'm looking at when I'm trading. the entire time. Where equal highs, where are highs that stand out, right? Equal highs right here. Do we take these out? No. All right, cool. We probably going up. Here's a equal lows right here. Do we take these out? Nope. All right, we probably going up, right? Here's equal highs right here. When we got here, we took this out, right? Okay, cool. Did it reject after it took it out? Nope, it kept going. All right, we still gonna keep going up. Same thing, significant high, we took it out, right? That's what I'm doing all, like, that's what my brain doing all the time I'm looking at the market. Sometimes I'm wrong. A lot of times I'm right. A lot of the times, a lot more times than I'm wrong. So then as far as the day go, here's that 12, here's that 3, right? We had an intermediate high, a low. We had an intermediate high. This is our high for the day over here on this candle, right? Knowing that we were in this area ranging for the most part between this high and this low over here, between this high and low over here, right? Until we got over here. The question of this was, how was price going to react once we got near this candle series of down candles right here? This is that opening candle for midnight hour. This is the true day open, right? Right here. When we got down to it, we traded above it, we came back into it. You could consider this just like an order block right here. If we go to the lower time frame, you'll see it over here. So again, while I'm in the market, I already noticed about this area, about this high, it got taken out right here. This high right here got taken out right here. Price came down to it, this area, order block, it bought, right? And it just consolidated. Came back down to this area and it held right here on this little small order block right here. Now, the whole time I'm watching this, I'm thinking in my head, like, are we gonna trade below this or not, right? We don't trade below this and we get something to say that we're gonna buy back up, right? Then here is where I'm gonna be looking to enter a buy. If we trade it below this, then I'm gonna be looking at this low. If we trade it through this area right here, I'm gonna be looking at this area right here. Because if we take this out, I'll know we should be selling at that point. And if we do, I can either get in at the break down here, or I can wait for it to return and then sell off. The safer play is to wait for it to return, right? I'm not using the EMA. That's just on this chart. I was just using that at a different time to show that. So let me get that off of here.
Okay, Corey, let me ask you a question just so I can sync this in my head. So that 12 o'clock candle, which is my 9 o'clock, that's the candle that determining the high or low that gets taken out first, that liquidity gets taken out first. And then the not first, but the consequent retracement from that as you got there.
You could be using this, or you could be using, there's another situation where you could be using the Tokyo and Sydney consolidation. If you don't get a high or low, you can use this Sydney Tokyo consolidation right here. You will use this high, this low, and then focus on the same thing. You would have had this low, this high. Did we trade below this low? No. We traded above this high right here. We returned to it right here, and you would have got that move. So you can expand this out, but I say focus on the midnight candle, because that a lot of hedge funds, banks and stuff, their algorithms start at midnight. So you'll get some kind of swing around midnight. Your first time you get volume into the market from retail and algorithmic trading is London open. So that's the 3 o'clock candle. All right. That's when you get the influx of volume in the market. Let me put that on here. So if you see this, algorithm triggered, we get some trading right here. It's light, it's no real trading. Then boom, we get the combination of all of the trade. We get algorithmic and we get retail right here at London during London. That's why this spike always happens right here. We go sideways, we figure out pre-market what we want to do, and then boom, the market open up again. And what happened, we responded to this same high right here. The same level right here. When we see this, when I saw this, I had one trade in above this high. After I saw price push down, I entered my trade right here. And then I had another trade entered in down near this candle right here. Rebalance, redelivery. Price expands.
See that consolidation right there between looking at your chart, yeah, right there between right, yeah. How did you know, determine that when the high of that consolidation, that yeah, that market, okay, when it went back up, okay, in my mind, okay, it didn't go higher than when it first broke across that 12 o'clock candle. So now it's trading down because it couldn't go back up. So how did you know when it came back and created that double bottom of that consolidation?
Right
that
here.
The move, yes, sir, that the move was looking to go up as opposed to the move looking to go down from the high of that consolidation.
I got you. You already noticed. You don't even realize you know how I saw it because you got this. What's that? Rebalance, redelivery.
Rebalance, right. Right.
What happened on this blue candle right here? We
It
traded
went
through
past-
it.
Right, traded through it.
So we pretty much voided this, right?
Right.
Even if we went to the hour and looked at the same thing, right? I did both of these things, right? Use this candle, right? We traded through it on this candle. So this is our rebalance, redelivery area right here. Traded through it, right?
Right.
When this candle came back up, it did not hold that area and push down to continue, right? So,
Right.
okay, it didn't do it on the 1 hour, right? Didn't do it on the 15-minute right here.
Right.
I even went to the 5-minute. Y'all didn't see this because I was doing this on another chart. And notice, again, rebalance, redelivery, we held right here. Now, what I'm looking at right here is the opposite scenario,
Right.
right? If we done, I shouldn't see candles trading back through this wick right here, right?
Right.
But what happened on this candle? We traded through it right here. We traded through this wick. We traded up here, traded through this wick, right?
Mm-hmm.
Now, same thing repeated. We can't trade through this. Same thing right here. We don't even come back into this no more. So the downward movement is out of the question.
Right.
And at this point, we already in this trade somewhere. We got in around 19, right? We already in this, right?
Right.
And we gone at this point.
Aha
Then
moment.
extra
Beautiful.
confirmation. Huh?
I say aha moment. Beautiful.
Yeah. Extra confirmation, right? When I knew it was real good was right here. When we got this candle, this was right around the market, just before the market opened. As soon as the market opened, we traded through that. I already knew we was good. I knew we was good at that point. Now we never rebalanced this. We just pushed up through that. We came up, never rebalanced this. We just pushed straight through it. Same thing over here. And then we don't get no rebalance again to right here. So while this is happening, I'm looking at my charts while y'all talking and we looking at how much money we making. I'm watching this to see, does this get taken out right here? Do we trade below this? Because if we start to trade below this, I might be telling you guys to take partial right here. If we don't and we hold this like we did, I'm not thinking about a partial, right? Wick rejection, I'm already marking this off right here. Do we trade through these 2 wicks? Yep, we do right here. In this case, when we traded through it, we went all the way to 34. We had a rebalance, redelivery right here, and expansion, right? So again, where is my next opportunity? Am I going to take a partial? Yes or no? I don't know yet. But I do see this wick right here. After this, I see this wick and I see this wick. So I'm watching these areas right here. This wick made first, right?
Mm-hmm.
We trade down, right? We came back to rebalance this area. And you know you're good as long as you don't trade below this, right?
Mm-hmm.
Then after we reject this area, right? We had this wick, right? We reject it again, and then guess what? We trade through it, right?
Right.
Trade through it again, right? We barely rebalance right here. We trade all the way through this, right? But this candle takes us to 35, right? We come back down to this area, rebalance right here, and then we expand all the way up here to 42. Now, we have a couple areas, right? We have this area, rebalance, redelivery. It doesn't do it right here. It fails to, right?
Mm-hmm.
No wicks on this candle. It just trades up through it. No wicks on this candle, right? It just trades through it. No wick on this candle. So when I'm telling y'all to take profit, I'm watching this kind of stuff, right? We're not having this over here, you know. I already know we near an area where it could turn, right? Because if we extend to the left on, let's go 1 hour. At this point, I'm going, now that we near getting into these profit areas, right? I'm back on the higher time frames and I'm looking for the same thing, right? So everything I just did on the 5 minute just now, I'm looking at the 15 minute. Okay, we rebalanced, redelivered here, 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 here. Okay, cool. And then over here. Now, I don't have a wick here to rebalance the redelivery from. So I would have been looking at this candle right here. Right? It's the last wick, right? This candle open up, it doesn't hold this, right? We just push down below it. I'm telling y'all to take profit after I see it doesn't hold over here. When I see it's not able to hold this body, I'm already like, oh, okay. I like that we already near this rejection area over here. I know we could be falling at any given time because we at this area of rejection already, right? Over here. So let's extend this to the left.
So Gauri, this was my question actually. Like when you are on daily, right? So on daily,
No, this is the 1 hour.
No, I was on daily, and Can you move to the daily? So I draw that fib, and yesterday it was on 88.6, right?
Yesterday, 88.6. Okay, this the daily.
Which one? Yeah, this is the daily, right? So I draw my fib. 1 minute. Where is my fib? Sorry. 1 minute. So you see that higher high and higher low, right? So that was the 51, 45, 51.
45.
From 45.51 to this low, which is 42.78.
45.51. Right here.
Yeah.
You drew your fibs from here to here.
Yes.
To 42.68.
Yeah.
Okay.
So I saw that yesterday when that was on 45.9, approximately 19. So that was near 88, right? I drew opposite side, right? So
Opposites. Okay,
yeah.
hold on. Okay.
So that time it was there, right? So that was supply zone. So I was expecting, and we were talking yesterday also. Now we are expecting sale, right? So
No, not so much. I did say we were. It should sell. I did say that, but what I actually was saying was, I also said that price is very, very, very bullish right now. So I'm not gonna sell unless I see very, very strong candles on a higher time frame.
yeah.
I'll continue to buy
Mhm.
as long as it's showing buy.
Okay. So yesterday
And
I was talking to you. Then I said that means now I am looking for sale because this is near to 88.6. That time you said that this is bullish, so we need a strong, and but there is liquidity also. So first you are looking for some retracement till weekly, and then it will go up that grab that liquidity, and then you will see for sale, right? So the thing is that, and this was for daily, right? And again for 4 hour this fib will be changed. So I was like, what how did you decide you should buy just on because of on basis of this rebalance delivery candle?
I think I explained it.
Yeah. No, so
Yeah. I mean, this was when I was talking about this area right here. That was how I decided to buy. And then the news confirmed and all that good stuff was the reason for the buy.
okay.
The technicals, the news, all that was the reason to buy. And like I said before, if we looking through this area right here, and I did want to sell, right? And I was looking at this move from here to here. And I think I still got it drawn up on there to say, hey, I would like to see it come back down to the weekly, right? But I'm not going to sell it unless I see that there's some strong candles to the downside.
Yeah.
Where do you see that?
Yeah, I don't see that also. So thing was that similar thing, because I was thinking saying if I'm not seeing anything, then I should wait. But I was like, what means I want to tell you about my thinking. I was worried about, because that is near to that high. Should I jump in buy or not? Right? I was waiting.
Well, in a case like this, it's just kind of your preference. Like normally, most of the time you'll hear me say, I don't want to buy this because it's too high.
Yeah.
or I don't want to sell it because it's too low, you know. But I only use the 15, the 5 minute, and the 1 hour to take this trade. I'm not necessarily saying like based off of I know based off of my higher time frame fibs, this still has room to get to 45, 49, 49, 50, 45, 50, right? So does it have room to buy it still up? Yeah.
Yeah.
But is it in an area where I could potentially sell off? Yeah. So that's why you hear me say, all right, for this trade, I'm not using a heavy lot size.
Yeah.
I'm only going to use a partial. And I'll only add on if I see it do this or whatever the case is, which is why.
Means what I saw, like I told you about this daily, and again on 4 hour, if whatever you draw, that you were just explaining that on 4 hour also, like your low was on 42.70 and high was on 44.33,
Mhm.
right?
This is
So
that same stuff that I showed y'all that was
yeah,
drawn up.
yeah, exactly. So on
618.
no, not this one, that on 4 hour.
Yeah, this is it. This is
Mhm.
what I was talking about yesterday. If it rejected and sold off, right, I was looking for it to sell off right here,
Yeah,
and it
and
didn't.
come to 78, right, right.
And I was looking for to say if it came down near here, I would be looking for a buy because we had this last swing down.
Mm-hmm.
We traded above and looking for it to come back right here with lower time frame. It just didn't do it.
Right.
But if you look at this move
Mm-hmm.
right here, from here to here, and then you look at the original move, you
Mm-hmm.
had this area, this area. We had this target right here. We
Right.
already know about this target.
Yeah.
And then this target is pretty much in line with the previous all-time high
Yeah.
right here,
Exactly.
right? And
Mm-hmm.
then we still had this move that we haven't finished yet
Mm-hmm.
from here where you had target at 70, 44, 72, 45, 25 area. We got that.
Mm-hmm.
Our projection would take us to 45, 81.
Mm-hmm.
This is the other move we had right here. Our projection lead us to 45 to 20. That lines up with this area pretty much.
Yeah.
Then the next area, 45, 72, that lines up with this area pretty much.
Mm-hmm.
This move right here, 45, 80, gave us that. And then this move right here lines us up with 45, 50, 45, 50. And then this lines us up with 45, 77. So all three, four of these fibs are putting us in or around the same area. So that's you got to consider that too.
Okay. 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 That is what I was thinking, because I was not sure I'm going to jump on that buy or not. But when you said buy, then I was like confirmed, kind of, okay, let's do that.
Yeah.
So this is what I want to discuss.
Yeah.
If I was alone at that time, then definitely I
You would
was
have missed it.
good. Yeah.
Yeah. No toilets were involved in this New York session this time. No toilets.
Yeah.
All right. Well, let me give y'all I'm gonna shut it down with this. On that note, let me give y'all the recording
Thank you so much.
of this session. This was a pretty good session. I hope y'all get it.
Yeah.
It
Today
was, it was awesome.
yeah.
Hope y'all go back and check this one out. I'm gonna do a smart money masterclass on Friday.
Friday at what time?
Guys, I will give y'all the time. The flyer getting made, so I have to give y'all the time.
This is your class or from IM?
Huh?
This is your class? Means you will do that?
I'm hosting it for somebody else,
Okay, okay.
but it's gonna be my class though. I'm just doing it for somebody.
Okay.
So,
Mhm.
so